In our last video, we took a look at NVDA and we discussed the idea of what we call a dead cat bounce, something that looks like a rally but really isn't. So is that what we're actually seeing right now as NVIDIA does one of the best days right ahead of its annual shareholder meeting? Well, as it turns out, the S&P 500 also played the game, going all the way back up to the most traded level and the potential for a bear area. In today's video, we discuss what's next for NVIDIA, what's going on with semiconductors and whether we might actually start to see mean reversion during a rotation, and of course, whether crypto just hit its low. Join us, guys, as we go through stocks, commodities, and cryptos for the days ahead. Well, welcome back everyone to The Daily Show. My name's Tom. It's great to have you here. And today we're discussing everything from the macro to the data to the lead indicators that you need to know as an investor and trader about markets right now. It was NVIDIA with a bounce up as we expected, thanks to the options market over the last 24 hours. And Tesla continued to start to build more momentum, which we've been discussing in recent shows. In terms of rotation, we'll get into that a little bit later on today's video. But if it's your first time here, remember to subscribe and smash that bell icon if you want to understand more about Wall Street's feeds and flows and how they work, because we do have some dark pool transactions that are kind of consistent with what we call distribution later on, especially on one of my favorite stocks in the market, which is a little bit scary. All right, let's go into the first story here, coming courtesy of Mike Zaccardi over on X. Goldman Sachs report talking about volatility this year. Now, if you know anything about election years, you'll know that when we tend to see these years, the bigger correction, if it's going to be one, usually comes in the back half. And the reason has to do with this VIX term structure. Notice how the VIX is already pricing in the chance of increased volatility crescendoing before the election, and basically showing here that we're going to have increased volatility moving forward. You'll also notice if we take a look at previous years, 2024, 2020, 2016, and 2012, all of them tended to see it, but notice that 2020, probably because it was coming off the pandemic at the same time, was realistically seeing the most amounts of volatility into the election event. And I also think that's because it was so closely contended and most likely will be again. Let's have a look if this makes sense to every other period of time. This is usually what happens to the VIX over that period. And you'll notice again, crescendoing November is perfectly normal. So let's take a look at what makes this a little different. And it comes back to options. Now, we've seen this level a few times. This is a great chart here. And I shared this one over on X. And basically it shows you that we've got the April period, the July period, the early March period, and right now. So what we're seeing is pretty much a lack of puts in the market, complacency across the board. Now, there are some puts very close to the current strike, but there's not that many when you look out 25 days. And this is a fairly important chart, and it does tend to show us peakings of the markets, and it tends to show us also, where we're kind of seeing big buy levels. Notice over here, the big buy level of October of 2023, and guess where we were? September of 2022, again, we saw too many puts in the market. And whenever you're getting to these periods of huge amounts of puts, you generally want to have greed. And when you want to go up here, you want to have a little bit of fear. And as Warren Buffett would say, probably one of the things that you'd be wanting to look at right now is being careful on the leverage. And you can see that that is not what many of us have been doing. Retail traders have been stacking in, as we shared in our previous video, into calls, specifically large tech calls. And that's been leading to those huge fall-offs that we saw in NVIDIA, 3 days of massive selling followed by a rally. But the question mark remains. When we get a sell like that, usually it means chop to even downward movement over the next 1 to couple of months. And as we talked about in our previous video, semiconductors do tend to do this. Now, funnily enough, it's not through the broader market. It's only through the large tech stocks. And this is different to many other periods of time that we've seen over the last couple of years. So what can this mean? Well, we have to ask ourselves the question of, have we topped off in terms of a cycle? Have we topped off in terms of the longer term run? Or are we seeing potentially just a little bit of consolidation here before a continuous bull move? Well, here's an interesting chart that says what S&P 500 typically peaks when quality and momentum are outperforming versus history. Now, we are starting to see that get up there, but do remember this does give quite a lot of false reads. These are the reads that, of course, were toppings of markets. And I think it's important, like any indicator, to look at it with everything else. Now, a lot of people, even in the comments section when this was posted, we're talking about the idea of seeing yields uninverting or a cut coming in from the Fed with this kind of read to actually take it seriously. And I tend to agree with that. It's very, very important. What makes it more likely that we may be starting to top the market for a temporary high has to do with these sentiment reports. And of course, this week we'll get a new one to see whether the bears have come back big time in their sentiment, because this is a very low reading. 22.5% is well below where we should be. We've been low for some time, but when you hit these big psychological levels like 5,500 and 20,000 on the NASDAQ, you've got to pay attention. Let's talk about cyclical tops though. Have we seen that? Well, here's Bank of America's bull and bear indicator, which is currently sitting at a 6. And this is still not in extreme zones. And it tends to mean to me that we're not even close to the topping of this market yet. And we've been discussing this idea for a while that we've probably got maybe another 1 to 2 years worth of bullish momentum that could be in these markets. Of course, we take it day by day. We do expect a lot of volatility to come through. But as you'll see in a chart that we share later on, it makes sense to previous periods, specifically the dot-com rally and also the 1960s rally. Here's a great chart here from Ryan Detrick over on X, and it basically shows you, could we see a larger correction in 2024? Well, the probabilities are on your side to say yes. There should be, usually in most years, somewhere between a 10% average kind of fall off. And you'll notice that some years you don't get it. Of course, election years can be volatile near the end. And I think that's probably what we're going to see. So far, we've got that usual stock standard 5.5 to 6% pullback. That's pretty normal. But somewhere between an 8 and 10%, it could be on the cards later on this year. And it's been a while now since we've seen one, not historically long yet. Maybe we'll put that in the next video, but certainly something that you could keep on the cards for later on this year. So what about NVIDIA? Everyone was freaking out on the previous session to say, oh, the market's going to be doomed and NVIDIA's over. Put it in perspective. This is a great chart here. Again, we shared it over on X, and it shows you that NVIDIA's stock drawdowns over the past year only, and if you've been a studier of NVIDIA, you would know it has some brutal drawdowns sometimes, kind of like Tesla with brutal drawdowns. It's nothing in comparison. So not even compared to the April fall. So always put things in perspective. Do I think NVIDIA could go lower? I do think it could go lower, even though it's a great quality stock. If you're an investor, would I be terrified? I personally wouldn't be. And we've discussed this in our previous video, and this was the theory. Basically, we talked about this being a temporary bull zone. We expect it to bounce up. I expected at minimum for it to get back to the 20-day moving average, which you'll see later on is kind of where we're approaching. And a big reason behind that is holding the 120 for the end of the week. You can see here how many puts are in the market this week, and it's in a negative gamma situation. So if 120 was cleared, held below, it would create what we call a cascade effect, which could bring in 110 or even 100 or even $80. It could bring in a very large sell. Considering this came through though on both Broadcom, on NVIDIA and other stocks to do with semiconductors, I do think it's part of a longer term rotation where we're going to see maybe a 1 to maybe even 2 to 3 month hold where NVIDIA is going to be up, down and all around, but it probably will consolidate here. Let's talk broad market. Some great charts here as well coming out from Bank of America. Again, Mike Zaccardi shared these, and basically it shows you what the market's been doing. Now you might think, well, everything's stuffed, but we've talked several times on this channel about central bank liquidity and more importantly, financial conditions. Now we saw deteriorating financial conditions as central banks around the world tightened up to try to stop inflation. Then we saw them loosen it even before they really had done the job because they're like, oh, we don't want to cause a crash. And you'll notice that a lot of the previous dip pullbacks have actually been when the market is starting to see financial dipping conditions. Now, we haven't really necessarily seen that yet. We haven't seen a sideways section on this one. It's not the only reason it needs to go down, but you'll notice that this is fairly consistent with the market bottoming, fairly consistent with big movements, and a great chart that I hope to share with all of you guys in the future. Again, a cool one there. Another one is, do we use overbought and oversold signals? Well, I think this is a great comment, and this is something that a lot of people bring up. In terms of using overbought signals or oversold signals, remember when something is overbought, it can remain overbought for a long time. And this is a great chart showing you that in terms of how long we've remained overbought with this particular indicator. The oversold side though, the fear, that can be an opportunity. So you'll notice here, it kind of gives you close to those lows when we start to go into that point. And again, coupled with other techniques, the oversold component can be, I guess a bit of an opportunity. Although in 2022, during a really big fall off, it's not so much. So right now we're going from persistently overbought to possibly starting to float back through. That may mean there's a dip coming, but realistically at this stage, not too much there. What about flows? Well, asset manager institutional net flows in futures, that's continuing to increase. Now, the flows are getting pretty extremely bullish, and we do need to be careful for this because, of course, early 2020, well, we all know what happened after that. You might not think that that was already going to occur, but I've said it many times before. I think that we were already going to head into a pretty big correction in 2020, regardless of what happened. 2018, another period where we saw institutional flows very bullish. Of course, that didn't work out so well. And then, of course, we've had several other times in history as well. Most notably, we got to around these levels during a couple of points. Over here, nothing happened. We dropped off. And then, of course, 2021, well, we all know what happened there. We ended up seeing that 2022 kind of collapse in markets. So flows at the moment, still looking quite bullish, starting to get to the upper end. And we'll have to watch this story over the next year, because if we're entering into these top end highs, that's telling us that the market could be looking at a much bigger correction, especially if it comes with rate cuts and all sorts of uninversion of yields, etc. What about net volumes? Net volumes, again, improving. So this basically shows you that, again, the market's not super unhealthy underneath. There is money on the sidelines coming in. And of course, it's being driven, in my opinion, as you would have seen in a couple of videos ago, probably about 2 weeks ago, we did a big story on buybacks and how buybacks were what was predominantly driving the 2010 growth all the way through to now. And you can really see that on this chart. Take a look at these buybacks. And as we know, they're accelerating at the moment. And what's that doing? It's driving the market higher. So as long as buybacks are continuing, as long as AI hype is remaining, and we still haven't seen IPOs, this is where we feel like we're at right now, somewhere in the later cycle stages of the market. Effectively, a period where we need to be more careful as investors, and we need to be more nimble in terms of the ability for us to say, okay, maybe we want to be swing trading certain sectors. Maybe we want to be looking at defensive markets and other alternatives as well. And of course, really considering our leverage positions around this point. If you ever want to learn more about that, we do have an advanced masterclass course where I go specifically into hundreds of years of data and really analyze and show you that it's actually not even hundreds of years. We've actually been doing a very similar thing for thousands of years outside of markets in economies. And we tend to do almost the exact same thing, which is pretty surprising. Earnings estimate progression. What's going on here? Well, we know that markets are still expecting better than normal earnings. Here are some of the other years, and you'll notice that at the moment we're tracking pretty well, and we're looking at some pretty nice strength, and then they're expecting even better. So the market's expectations are high, and that's why each and every earnings season is going to be important. Let's move over to the dark pool activities. So there are some good cases for the bulls, and then there is really one big case for the bears. And this is the Vanguard S&P 500 ETF. And you'll notice that we get quite a lot of random dark pool activity around these lows down here. Now, this has been happening a little bit in terms of dip buying. We saw it in a couple of S&P 500 funds, and they purchased up. But as we know, there are even larger trades sitting up at around these levels, which sits around that 500 zone, which is of course 5,000 equivalent. When we then look at Microsoft, what does that look like to you? I'll let you know and let you kind of mention it in the comments down below. Let's see if any of you get it correct. But I can tell you that is a lot of transactions going on in Microsoft. And if you've been watching this channel for a while, you would know I have 3 pillar stocks: NVIDIA, Google, and Microsoft. They are my favorite 3 stocks in the market. And yeah, Microsoft has always been one of my favorites. Got the best moat. Moat investing is always something I really like to do. So I always like that saying where if you fell asleep and you went to sleep for 10 years and you couldn't, let's say the stock market closed for 10 years and you couldn't trade, would you feel comfortable in these stocks? Well, I would in NVIDIA, Microsoft, and Google myself. Anyway, right now, short term, maybe I wouldn't because that is a lot of transactions coming in at the highs. And you can kind of see how the previous transactions of this size have manipulated the market and moved it around. So someone's doing something, and certainly worthwhile mentioning. If you want to get also updated on some of our charts, such as our S&P 500 charts, which we're just about to go through, remember, links in the description, and you can check out our X, and we post them pretty regularly there, quite a few times a week, so definitely check it out. All right, let's talk rotation flows. So I'm actually still liking energy quite a lot. We discussed this over the last 24 hours. We saw a little uptick in energy. Last 5 days, it's been the best performing sector. And I think that's important because what we might be seeing, and of course we'll go through metals later, is possibly there'll be a reinflation trade. So there may be like a pickup in metals that's just about to come. And copper's falling to, I think, the next zone. And if it finds support where I think it might, this next kind of level that we're looking at, then this could become a big storyline. Energy, again, doing okay over the last 24 hours, holding up. You can see it was a full rotation out of everything else and back into semis, tech, communications. Now, do I believe that? I'm not so sure about that one. Let's have a look here at the charts. So when will I believe something like this? Well, it comes back to looking at the price action and flows. And we'll talk about the options in just a moment. But as we discussed, the bears were in control of the previous session. They basically pulled it up to this level, which I thought was an excellent sell. And then the markets came down to these lows, closing on the low. And that usually means there's more to come in terms of the way that this market was looking. Now, this doesn't really mean that much to me. We did expect a bounce over the last 24 hours, and it's kind of come back to where we would expect. Do mark out things like the 5,500, 5,490 though, because if the market closes above those, I think it might be significant to say, okay, we can't stop a freight train like this easily, so we might be going into a wyckoff distribution or even possibly new highs, and we keep pushing higher. It is still, a bull market after all. It's going to be hard to stop it. Now, where did we end up? Well, we ended up at the level that I would have expected. I mentioned that I was going to go and have a look at the levels, and I ended up finding that 54.77, which is where we are right now, is basically where I would expect the bears to try to recommit somewhere around here to possibly trying to get that market still short. Do remember, we have kind of changed trend on smaller timeframes towards the negative side. Of course, daily, weekly, you're not going to be terrified, are you? It's just still bullish overall. 54.50 now becomes the biggest zone. We're in what we call negative gamma, which basically means that if the market is able to get below 54.50, I could see what we call a waterfall effect, which could be a very large and fast sell. So be careful of that. And it's a very important time if bears are going to take control of the market, because they really need to stop the market inside of this box area. You'll notice the next 1 day, we've got call resistance at 5,500. We've got the 1 day options expiration move of possibly 5,500 to 54.32. That happens, as we know, 68% of the time, according to the options market. And I really think the two main levels are where we are right now and 54.50. If we manage to break and close below there, then the markets could really start to fall off a little bit. Let's take a look at the options. And first up, we'll go through, of course, this one, which is the S&P 500. You can see we're still sandwiched between two areas, 54.50 and 5,500, with basically all of the major options being on either side, which suggests that we may be in for some more chop or pressing those two sides, either 5,500 or 54.50 over the next 24 hours. Similar things happen in the next session when, of course, we go over to Thursday, where we still see that 54.50, 54.40 being a major put level. Again, negative gamma environment. If we start to push down, we could create a cascade waterfall effect. So be very, very careful of if markets manage to push and hold those lows. That's where you want to start thinking, okay, well, maybe this market's going to start to turn down. NASDAQ, if we take a look at the CTAs, they are still, I would call it neutral. We've got S&P 500 neutral as well. Brent had a small uptick, which is, again, consistent with what we're thinking. And gold went down. So basically, gold is still looking a little bit negative for now. And we're looking for, of course, that to hopefully consolidate in the future. Let's now jump into the charts and have a look firstly at the options market and bonds. No real warning signs there from our main indicator. Home builders certainly took a big dive, so something to keep an eye on. Not a great sign. And when you combine that with something like, of course, Dow Jones Transportation Average, it's still, I would say, neutral. It's not really showing superior negativity yet. XLY versus XLP, the American consumer, financials, and regional banks, all of those were slightly down on the session. Not enough to report back on yet. What about yields? Well, yields continue to stay between that 4.7 level and 5, so we don't really have much information maybe till the core PCE, which is later on this week. And do remember that's usually what the Federal Reserve uses as kind of one of their main gauges of inflation. Treasuries have started to rebound a little bit as we see the yield curve show some cuts possibly coming in as early as 2024. We'll see about that. We'll have to find out what happens, but we do like treasuries realistically more around that 89 to 90 zone. Dollar index, really tough, just sitting in the middle of nowhere. We've discussed this one in plenty of videos, so go check out our previous one. And gold is something similar. I'm not seeing too many changes here to what we've discussed over the last 2 sessions. So gold still in consolidation for now. Now, copper did break towards the downside. So gold didn't break down, but copper certainly did. So copper now looks like it's trying to go for 420, which is a 61.8 fib. It's pretty much where copper must find buyers. And I would expect that this is where we're going to see real buyers to come in for copper. And it's a very important zone. I've moved the watch reaction down to here. We looked for a turn in here. We were patient. We didn't get past the 20 moving average. That is still what we're looking for, plus price action. So what I'd expect it to do is something like this. 20 moving average comes down, breaks above. That will be a great sign. And that's what we want to come from copper. And that should hopefully bring back metals into the markets. US oil still looks decent. Looks like it's accumulating. Yeah, it could be distribution, but for now the trend is up. And of course, we're looking for 84 to 84.50 a barrel here. And that is helping the energy stocks, which had a okay session last 24 hours. It looks like they're consolidating to move higher. And of course, they're currently in a downward channel, but I'd like to see that one break out. Energy stocks have been forgotten for quite some time. They've pulled back pretty brutally. And while some people call that a flag, I call that just consolidation because that's a massive flag in terms of the pullback. But yes, certainly consolidation. Like to see some big flows coming in, and maybe we'll look at flows later on this week when we get the data. Tesla, not bad session, not quite above the 189 level yet to give us that just sub 200 that we're looking for. But another great day of consolidation. We continue to look at this from a flow perspective. So basically, we'd like to see Tesla continue to move forward and look towards the bull end. And for now, yeah, that's there. We'll update you on the options for that tomorrow as well. NVIDIA, similar kinds of things. 126. So we hit the daily 20 moving average. Now, somewhere in here, because there's a gap that was also here that was filled, would be usually where I'd expect some weakness to come in from possibly NVIDIA. Now, the problem is that where do you, as we mentioned in the last one, yes, we knew there was some structure here and we had all of this in here for options reasons, but what about if the market actually continues to go up? We still expect some chop. So some of the top ends that you might expect if you were like trying to look here for trades might be to go back to a 61.8 fib, which is 132. I feel like this is a pretty good, if you managed to get in yesterday, it's a pretty good day trade or, couple of day trade, 6.76% up, obviously 2% down post market. So you could even get 8% out of the session. And it managed to get back to where I would expect it to start to struggle a little bit. So yeah, realistically, NVIDIA, yes, it bounced. Yes, everyone's hyped up about it. And it's a great stock. And of course, if you're buying 15% cheaper, that's better. But I wouldn't be surprised if this is going into what it always does, which is consolidation. And you'll notice we had consolidation over March into April. We've had consolidation all the way from July into November. And this stock loves some good consolidation. Then it rips really, really hard. And it all makes sense as well when you think about it from just even a massive kind of trend line. So if you take that trend line and you put it in and you think about the break level, you'll notice that as it breaks past this flag in consolidation, it goes around the same length. So could it be in for a pullback? Certainly seems that it may be. A lot of the time, the pullbacks are similar in length as well. So you can kind of put that in and then say, okay, well, do we really expect that much more? Well, based on the previous one, you wouldn't. So you just basically expect some kind of chop to start coming through. I do think that even a gap fill, though, down to the 110 is significantly possible. So NVIDIA will update you as we find out more information there. AVGO did not see the bounce. So this one, of course, is a wild stock as well with some big movements. It didn't see the bounce that the rest of the semiconductors did. And one of the things is you'll want to be looking at is, of course, semiconductors versus SPY. So if we take a look at the weekly, this becomes a real distinct possibility, mean reversion. If you have a look at every other one of the major pullbacks, mean reversion, mean reversion, mean reversion, etc., 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 mean reversion again. So one of my favorite combos for semiconductors right now is that area there. Basically around the 0.45 ratio, which we're currently trading at 0.48. This is why we use these long, short kind of codes so we can figure it out. And to me, that makes the most amount of sense, at least with the market as it currently sits. Where are the opportunities right now? Well, of course, we're looking at other markets. We've been talking a little bit about China. We did see HSI start to improve, and it's putting in as good as it can do today, basically flatlining. We want to see that back above 18.3 and then, of course, above 18.6 to really get this going on. And it's doing the pullback we knew it had to have, consolidation. Now we'd like to see it break back up. So we're looking for even more signs, and we've got the first sign of potential breakup at this point. What about the Dow? Well, it broke out, then it sold off. Back down to where you would expect buyers to come in, maybe even a little bit lower, down to 38.8. Could be a good area for you to look at for the Dow. And if we have a look at the NASDAQ, if you actually took these 2 weeks together, although they're not closed, it would form a long leg doji, a high, a low, an open, and a close. So I would say that the NASDAQ, of course, rebounded thanks to all of the tech stocks coming back, like NVDA in particular, but it hasn't really shown us anything that we didn't expect yet. So back into the consolidation here. This is, of course, the supply. So we have a drop, we have a supply, and then we have a drop. So if it's going to find a bear, it usually does so in this zone. And this area totally in here would be where you would expect a bear to come in. Now, if we manage to close above this area, well, that, of course, becomes more bullish. And this is important. What happens here is going to be key. So bears will want to take control of this market. US 2000 IWM, nothing to report here. Absolute chop city, mixture of good and bad quality stocks, of course, in that market. And if we have a look at Bitcoin, it's done its job. It came off the first major support. Now, we talked about it around here in the previous video, and I mentioned this may actually be the low for Bitcoin. And one of the reasons is it can't really afford to go too much lower. Think about it this way. We've had an upward market. We've got a lower high here. We do not really want to see a lower low. That would be bad. It's come off the major support here. It's trying to hold above this 20 weekly moving average, which we know has been, again, mean reversion is always a standardly good moving average in these markets, and it's been pretty good. And I think the excuse for selling it off was a joke. So basically speaking, not that really matters, it's the crypto market, but that should have put in a few of the lows. So one of the things that you can always look at whenever you're considering these markets is to go and have a look at some of the coins, the altcoins, and see whether they're starting to come into structure. We mentioned Avalanche before, just because, again, I was looking for it to come into structure. A lot of alts have come down to where you would expect them to start to find consolidation after what has been a pretty brutal sell-off. So this is a 63% sell-off in just this coin, which is considered a relatively good coin, and I guess. And basically, this is where you would expect it to start to find a buyer. So a lot of the coins have come down to the levels that you would expect. For the week ahead, really what's important, well, it's got to do with this one here, Core PCE Price Index. And that's the one the Fed looks at. And of course, that's on Friday, June 28th. So make sure to watch out for that. Make sure to follow the channel if you enjoy this type of content. And in terms of broad ideas, I guess we expect this next 24 hours to be pivotal for the bears, as we've already ascertained some of the key levels on the S&P 500. And we really want to see some price action on the smaller time frame. So day traders might be excited about the next 24 hours. And of course, a lot of other people are going to be seeing whether Wall Street is actually rotating into the financials, into energy, into maybe even metals in the future. Thanks so much for watching, guys. If you want to check out some of the other stuff we do, including our courses, 7-day flash sale. Bye for now. See you in the next one.